Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you're able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together part 1 on September 16 between 9 and 9:45 GMT. We'll track the market using the live market code page. I've given the link for the same. Let me also display the camera over there of the live market code page. Currently, Euro is trading around 1.3797, 1.3799, 1.3778 is the new low, and 1.3892 is the high. 79 pips negative net change is seen. And in the case of GBP, 1.8 is the current level, 1.5778, 1.5781 are the current levels, 1.5747 is the low, 1.5815 is the high. 21 pips negative net change is seen. So when compared to that of GBP, Euro has dropped more, and you know very well yesterday, because of some coordinated effort, they made a very good upward spike in the case of Euro and GBP as anticipated, and that was an extended move on the upside. So today they are doing the intentional move, making a slow slide during the day. And in the case of USD Yen, 76.71, 76.74 are seen as the current level. 76.68 is the low, 76.85 is the high. 2 pips positive net change is seen. So all the three currencies are showing USD gaining move. And also in the case of USD CHF, yesterday they came down to that level of 86 area, currently trading around 87.44, 87.47, 86.88 is the low, 87.54 is the high. 50 pips positive net change is seen. When Euro has dropped about 78 pips, CHF has gained only about 50 pips, so they wanted to just hover around with regard to Euro CHF around that 1.20 area. And many are of the opinion, because the peg level is 1.20 in the case of Euro CHF, probably it may not move on either side. But you know, the players are not going to leave it like that, and they are expected to make further gains in the case of Euro CHF. And in the case of USD CAD, you come across, it is trading around 98.48, 98.52, 98.31 is the low, 98.59 is the high. 14 pips positive net change is seen. So yesterday it came down drastically in the case of USD CAD, and now it has started the gaining process. But in the case of Australian dollar, it's also showing positive net change of 20 pips. It is currently trading around 1.0348, 1.0351. and 1.0296 is the low, 1.0360 is the high. 20 pips positive net change is seen. So when Euro and GBP, when Australian dollar and Canadian dollar show positive net change, we understand that they are doing contrarian moves. And when they do the contrarian move in the case of commodity pairs, that indicates that they are handling the crosses of the commodity currencies, and later on they will come to that of majors. So it's a mid-session, so they are trying to do that. So let us just refer to current levels with that of the initial lows and the highs set for the day. Then we will be able to understand what they are trying to do. Let me focus the camera over that of the PowerPoint presentation showing initial lows and the highs for this particular week. This that table, I show it on a daily basis during that of the Asian session live market analysis webinar, and these are all the levels taken between 2:30 and 3:30 GMT, or finally around 3:30 GMT. We can note the initial low and the initial high, which are set in the live market code page. Today the initial low was 1.3837, and currently Euro is trading below that for more than 30 minutes. From that of the start of the European session, it has come below that of 38, 37. Still, it has not gone above. So what it indicates that they are doing the intentional move, and they wanted to further make the slide. The high was 1.3892, and that was lower than that of yesterday's US session high, and so which indicate that the traders have turned long. Because of that, the players are making the slide in the case of Euro and GBP. GBP's initial low was 1.5783, and they breached and formed 1.5747, and still holding below that of 1.5783. So further slide is expected, but In the case of GBP, they had shown lesser net change when compared to that of Euro. So GBP may not drop very big, and they may drop Euro some more, and as a result, we may come across Euro GBP started making the slide. And in the case of GBP, the high was 1.5808 initially, and then subsequently they formed the new high 1.5815, and that now is very clear that they made that upward stop and before making the slide, and now they have done the downward stop and then holding below that of the low, and so further drop could be seen nominally. In the case of CHF, 86.88 is the initial low, and they have not breached it, and 87.24 was the initial high. They have breached it and gained the level 87.54, and currently trading around 87.41.44. When it comes closer to that of 87.24, we can buy, because they are holding above that of the initial high for more than 30 minutes. And in the case of yen, 76.68 and 76.85 are the lows and the highs, and they are not breached it. They are simply consolidating it, and when the spread is less than 40 pips, we don't enter into such currencies. And in the case of Australian dollar, 1.0296 was the initial low, and currently we come across 1.0296 as such is intact, and it is trading around 1.034447, and 1.0354 was the initial high, and they breached the high by about 6 pips and formed 1.0360 and come below that of 1.0354. It indicates that they are making a lesser dip in the case of Australian dollar when compared to Euro and GBP. This is mainly to gain levels in the case of Euro Aussie, and then subsequently they are expected to slide Australian dollar also. Then in the case of dollar, 0.9892 low, and they breached the low by about 4 pips and formed new low 98.31. Sorry, in the case of Canadian dollar, 98.31, they formed the new low and currently trading around 98.52, and the high was 98. Sorry, that was estate. Okay, 98.33 is the low. They just breached it by 2 pips, and 98.54 is the high, and that they also breached it by about 5 pips, and currently trading around 98.53, so around that of the initial high. So they made a downward stop and gained the level, and they are expected to go higher. So these are all the initial lows and the highs. We have to keep it in mind in order to take the positions during that of the European or US sessions. So let me go to that of the other PowerPoint presentation. So how exactly we have to proceed in market trading? First of all, we have to understand the market has got a different time frame as far as the players are concerned. The players follow the given time frame for each of the sessions. You can call it as Japanese, European or US, or you can call it as session 1, session 2, session 3 of the day. So 0030 to 7 GMT is the Japanese session. Then afterwards 30 minutes gap time is there. During the gap time they make the false move. Then 7:30 to 13 is the European session. So we are by 9 GMT now, 1.5 hours after the start of the European session. So they are handling during the mid sessions the crosses later on, and you find during the close of the session they will handle the majors again. So during the start of the session, around 1.5 hours from the start of the session, around 1.5 hours from the towards close of the session, they handle the majors, and mid sessions they handle the crosses. That you have to keep it in mind. Then you come across a gap time between 13 and 13:30 GMT. Today I will be giving the part 2 of the webinar by starting from 13 GMT, and we will also watch for about 15 minutes of the start of the US session. So I'll explain to you how exactly the gap time trades can be done during this particular time. The gap time moves are false moves, so if they drop, we will buy it, then quickly book profit. If they gain, then we will sell and quickly book profit within about 30 minutes from the start of the session. So 13:30 to 20:30 GMT is the US session. Afterwards, 4 hours of the gap time is there before the next day commences, and then the cycle continues. So these are all the timings followed by that of the players. If you follow these timings, you will be able to really understand how the market is making the moves. With regard to the basic trading strategy, the factors to be considered in market reading. So you have to use that GMT time frame to track the market. And also I explained to you with regard to the session time, the gap time, the session start, mid session and the late sessions you have to take into consideration for your taking trading decisions. So during the start of the session, end of the sessions or late sessions, you can think of taking positions in the case of majors or close the positions in the case of majors when you have taken already during the start of the session and close it before the end of the session in order to protect the profit, or keep stop somewhere so that you can continue with the next session, provided you are able to just retain a minimal profit by keeping a stop in a profit making position. Then also, what's the live market code page? I have given the link for that, and you come across the initial low, high, and also the current levels, bid and ask levels with the spread given. And the spread may vary in the platform, doesn't matter, but you can always refer the current market level to that of the high and the low, whether it is near the low, near the high, or below the low, above the high. These things you can just refer it from time to time, and from there you can understand whether they wanted to make an upward move or a downward move. And they are all referred as the type of moves, what they do it in the market. Then identify the currency which has made spread of 40 to 50 pips and the current levels, whether it is closer to the low, closer to the high, that you just ascertain by referring to the high or the low set for the day. Then if it is in the middle level, avoid taking positions. Then when it is higher, closer to that of the initial low or closer to that of the initial high, you can do a swing trade, buy near that of the low or sell near that of the high when the low or the high are not breached. And now I explained to you in the case of euro, they breached the low and staying below that of the initial low. Then what sort of trade we can do? I'll explain with the help of next slide. Then entry. Within a session, we can buy near the low or sell near the high when the low or the high are not breached for 30 minutes of our watching from the session start, during the session time and or during the session close time. So session close time, you can, if they are near the high, you can take a sell. Then probably gap time, they will make a dip. You can book profit. And the session start also, the next session start, they may make a small dip or a small gain in the dip. Then you can try to keep stop at entry in the profit making position and book profit. So exit the position with a profit when the going is good, near the opposite level. Suppose you have got a lower level buy, near that of the low you have got a buy, you can just book profit near that of the high set for the day. Suppose you have got a sell near that of the high, then you can close it with a profit near that of the low. That way you can understand how much of profit you should be able to gather during that particular trade. So for a buy position, near the high we'll close it. For a sell position, near the low we'll close it. And use stop to limit the risk. And 30 pips stop, you can use it. And many of the traders have got the tendency to avoid keeping stop, but avoid doing such things. Always try to keep a stop or a hedging order to limit the risk. When 20-30 pips profit is seen, then try to keep stop at entry and remove the other stop or the hedging order so that you don't lose any money. So first of all, you have to reduce the loss to nil. Then subsequently, you can try to maximize the profit. But if you watch the market when the position is making profit, you don't feel like closing it with a profit. And then what happens when they just quickly reverse it or using some data release or some breaking news like yesterday, then you will be vulnerably caught in the market. So if you keep stop at entry, absolutely no problem. You can just get out of the position and re-enter again by looking at the market, whether you can do a buy and sell trade or a sell and buy trade. So always be objective during that market moves. And if you become bullish or bearish, changing the mindset becomes very difficult. The entry and exit can be fine-tuned by using limit orders. Instead of taking the market position, sometimes they will quickly dip. And if you try to sell market, probably about 10-15% lower level, you could have sold. Then later on, you find the market make a small rise. Then you repent that I could have just waited to sell during the next pullback. Instead, you keep 10 pips above that of the market, a sell order, and see whether they are coming closer to that and fill it in case if you want to sell. Then in that case, if it is not filled in 30 minutes time frame, you can modify and take the position in the market. So that will be a fine tuning of the entry and the exit levels. Then avoid impulsive decisions. This is most important thing for that of the traders that buy during that of the quick rise. Like yesterday, they made a very quick rise in the case of Euro and GBP. If you try to jump into that, you know very well, they don't show you the profit. They show you that you are the winner by buying at the highest level. And they don't show you profit. Then again, sell during the drop is also a very great risk trade. So after the drop, when market condition is visible, then you are the last one to sell there, but all others who are taking the sell position at a higher level, they are willing to buy. And you are selling to them and just easily giving them the profit. Without understanding, you are selling at the lowest level. So always, whatever the chart or other type of studies you do it, avoid selling it near that of the low, avoid buying it near that of the high, because they may end up in risk trade. So it may appear that they are breakout trades, but not all the time the breakout trades could be successful. In the event if the high or the low are breached, today we come across in the case of Euro, they breached the low 1.3837 and they have come below that. And identify the type of move, whether it was a stop. And in the case of GBP, I explained to you, from that of the initial high, they made about 7 pips upward stop and then started making the slide. So how you identify it's a stop? Because they just form the high and within 30 minutes come below that of the initial high. So when the move is for a less than 30 minutes, just go above and come below that of the initial high in less than 30 minutes. It's an upward stop. Then a false move is the one wherein the market goes up to that of the high without breaching the high, it comes down. Yesterday you would have noticed in a false move in the case of Euro, the initial low was 1.3704. They came down all the way from that of 1.3787 to 1.3704, did not breach it and went up all the way to 1.39. So that is a false move. So hope you understand, they don't breach that particular initial low. You might be thinking that it is a pivot point and things like that. The players use such levels as a simple tool for their market moves. They don't complicate their moves or they don't do sophisticated analysis. They only get the information that whether the traders are predominantly long, predominantly short. And they don't mind giving profit to that of the lesser number of traders rather than earning from that of the more number of traders. So if more traders are predominantly short, like yesterday when it went up to 1.38, a lot of traders have taken the sell position, it went up and it triggered the stops. And afterwards today you find they made the extended move. They cut the high, stayed above there for more than 30 minutes and just continued to gain for 2 hours. And they started holding the high, stopped breaching the high afterwards. That is an extended move. So after the extended move, what they are supposed to do, the opposite of it is the intentional move. So opposite is intentional move of the extended move. So they made an upward stop or upward extended move. The intentional move is the slide. So that is what they are doing it now. And during trend reversals, you come across extended stop. So once you see the extended move, you need not ask me whether the market will fall or rise. You can straight away understand it is going to be an intentional move the next day. From yesterday your session, you can derive that they are going to drop it today. So that way, if you identify the type of moves, then it will be easy and child's play for your trading. Then for the extended move, wait for 2 hours to enter the counter trade. When they gain the level, then sell. When they drop the level, buy. During trend reversals, they may make extended stop and like upward stop and then drop, or a quick downward stop and then rise within about 30 minutes to 2 hours. And that you see only during trend reversals, during month end and month beginning time. So if they cut the high or low and stay above the high or below the low for more than 30 minutes, do a technical trade of sell below that of the low or buy above that of the high. Then try to exit within the same session or in the next session when the going is good after keeping stop at entry. So if it is an intentional move, they do that move for at least 2 sessions. They started the intentional move from that of European session. So during the Japanese session, they have been holding above that of the initial low in the case of Euro and GBP. And during the European session, they started making a slide. So understand that they are expected to continue the downward move till the US session today. So see whether it works all right or not. Then some of the people wanted to know something about the hedging, how exactly effectively we can use the hedging, because I have been explaining it about hedging for many times, but subsequently when hedging facility was withdrawn from that of US trading platforms, I thought that it may not be having any relevance. But now I see that many traders have opened that account in European platform where the hedging facility is available. Then you can understand about the importance of hedging. Hedging can be used instead of stop. Suppose you have got a buy position at 1.3830 thinking that the euro will go back and keep a hedging order at 1.38, and when the market comes down and you find that the hedging is making profit, you keep stop at entry. And then once the market comes down further, you find that it is not hedged, it is not filled my hedging, or it is just filled and come down and things like that. Then you keep another hedging order below that and you find that buy is not at all making profit. So at that time, you can simply close your original buy position with that of the hedging. So let the market go to 1.35, you don't bother because you have got a buy at 1.3830 and a sell at 1.38 and 30 pips profit, loss is blocked there. And you can simply close it with 30 pips, even though it comes to 1.35. So it can be used instead of a stop. Suppose if you use a stop, then it closes the position. Then later on, you find that the market moves in line with that of your expectation, the upside. Then you are not in a position to take another buy position because you feel that during the whipsaw move, they just stopped you out and went up. Whereas if you use the hedging, then you have both the buy as well as the sell. You just see whether the sell is making profit or not for about 10 to 30 minutes. If it is not making profit, close it with a nominal loss. Then you can continue to trade with that of the buy position. So any type of move they do, the hedging will be able to really help you out. The hedging can be used to continue trade when the market moves in our favor. And you know that euro came down. Suppose somebody has got a buy position at 1.39 and 1.3870, a hedging. Then the hedging was continuously making profit and came down to 1.35. Doesn't matter. We'll wait for about a few days and then it comes up to that of 1.39. You keep stop at entry in the hedging. 1.3870 is closed and immediately went above 1.39 and you just keep stop at entry in the buy position. And you earned back the money. So you can just, when the market moves against you, simply protect your equity by using the hedging. Then hedging can be used to either way trading. So on the downside, when they come to 1.35, you find that beyond that they are not dropping it afterwards. The low has become 1.36, the low has become 1.37. You know that it is in an ascending fashion. So they are expected to make a rise. Then at that time you book profit in that of the sell position and keep it below under the hedging order. So you don't expose the position just like that. And you always keep a hedging order to limit the risk. When the market moves up, you also trail the hedging order upward, maintaining 30 pips from the market or 40 pips or 50 pips. Depends upon the comfort of your equity. Then once the buy position makes profit, keep stop at entry and start making profit on the buy side also. So there are only two possibilities. You can do buy and sell trade or a sell and buy trade. If you are hedged, then you have got both the positions with you. You handle the sell position as if you are a bear and trying to book profit. You handle the buy position as if you are a bull and try to book profit. So it is within us. The hedging can be used to reverse the trade when the other way move is good. Suppose from 1.39 it has come to 1.38 and afterwards it is not going up again, then you simply close the buy position with loss of 100 pips, doesn't matter, and the sell side is making 70 pips profit if it is 30 pips hedging order. So even though the buy is closed with 100 pips loss, the sell is making 70 pips. Still your loss is only 30 pips. When the market move down further 30 pips, then you have a break even. Another 30 pips move downward, you make profit. Another 30 pips, 60 pips profit. Then further down, trail the stop and maximize the profit on the sell side. They can only do a trap and you have position to book profit. At that time, your smart decision making is very important. After all the move, if you try to cut that sell or a buy, then you might be in distress. So in the first move itself, we can understand how the hedging is making profit or a loss. Then if you try to decide in 30 minutes to 2 hours which one to close, then this trade will be very effective. Then hedging is used to hold the position and continue trading when time permits. In the event of emergency, we can hedge and leave the trade rather than simply keep an open position in the market and all the time praying to God that position should not make huge loss or there should not be any margin call, etc. You can just hedge the market and go and attend to your work, and after about 2 hours or after about 2 days or even 10 days, you come back and see where the trade is. You're not comfortable with the trade, close it with 30 pips loss or 40 pips loss. In case you know how to handle it, then try to book profit on the sell side, try to book profit on the buy side. Or close the buy side with 70 pips loss and close the sell side once it makes about 30-40 pips downward move with a profit or with a break even. So once the positions are in hand, we have got maneuverability to earn from that market. Without a position, you cannot earn from the market. So hedging helps you because you have either way positions, either way you can handle it properly. The hedging can be used to close the position at any time instead of stopping it out of the position during uncertainties. Sometimes you come across when the position is hedged, the market is in between the buy as well as the sell. Both are making loss and people lose patience. And they simply think that, okay, I'm stuck in between. So have you ever seen the market is struck like that between your two positions and the players are making moves in order for you to close both the buy and the sell? No, they are not bothered about the individual traders. They are just consolidating there and you are just entering the market when the market was making subdued move. That is why the market is staying in between your buy as well as the sell. But if you wait for some time during the session close or the next session, you will find either the sell will be making profit or the buy will be making profit. So suppose you have got a buy position and 2 hours it is not making profit, you close it with a nominal loss. That is the first rule. In case if you do not want to get rid of the position, you are possessive of the position, at least hedge it. When the uncertainty gets over, then you continue trading. Then hedging can be used to spread the risk with limited risk in each position trade. And I explained in my trading system the position trading strategies. Every 100 to 150 pips you can continue to buy during the drop and keep 150 pips limit in each position. And for all those spread of the positions, you can keep 30 pips hedging order so that once they drop continuously, like how they had dropped it from 1.4344 level to 1.35, and when they drop, all the hedging will be making profit. And you can book profit in all the hedgings and keep around 1.3450 the hedging order for that. Then let them rise all the way. And as they show profit in all the buys, you just close all the buys with a profit as well. So this is a position trade, and for that you need not watch even the trading platform. You just enter the orders and just close the platform, and you see that every day that some positions are closed with profit or some positions are hedged. And You just wait for the month beginning to enter all the orders, and by you will be able to close on one side. Next month you will be able to close on the other side. These are all simple position trading strategies. There again, hedging helps you a lot. The hedging can be used to break out trades. Suppose you have a buy, similar today you come across that euro went below that of the initial low, you are taking a sell position and you want to keep your hedging order above that of the initial low, because suddenly they can reverse it. In that case, you will be hedged there and you can book profit on the hedge side. On the buy side, later on, if they drop it, you book profit on the sell side as well, because pullbacks part of the market moves. Then hedging can be used without additional margin in many of the platforms. So many of the platforms, when you use the hedging, they don't take additional margin, so that you have two positions to trade but single margin. That's an advantage. So now coming to the forecast. In this session, GBP are expected to make swing and slide moves. What trade we can think of? Already they have dropped euro, as I explained. They came up to 1.3811 and started making the slide. They are not gaining it. 1.3837 is the low. What we have seen, any pullback. So we'll keep a sell limit order. $1.3830, we keep a sell limit order with the entry stop of 30 pips. In case if they just fill it, fine. Otherwise, we will try to take the position at market. After some time, we watch for 30 minutes. If they are not filling it, then we enter in. Then GBP, the initial low was 1.5783. Still, they are holding it below there. So we will take a sell. With an entry stop of 30 pips. We'll keep a sell. They have come up to 1.5781, now 83. Okay, now it has become a sell position. Hope you are able to understand. I am doing a technical trade. Sell below that of the initial low. And now they have come above that of the initial low. Let us see whether they are sustaining it. Then in the case of CHF, they have breached the high. The initial high was 1.8724 and currently trading around 8745. Just around that of 8724, we just keep 8730, a buy order with 30 pips hedging. Entry stop. Then in the case of yen, the spread is very limited, so we are not taking position. In the case of Australian dollar, and the high is 1.0363, the low is 1.0296. Market is in the middle level, so we'll keep only a sell limit order. Just 2 pips below that of the initial high, we are keeping it a sell order. The initial high is very important because they made about 5 pips upper stop and above that of the initial high. The current high is 1.0363 and 0359, they showed it earlier, 1.0358 we can keep. Sorry, sir, I don't use the chart. I think you have come for the first time. Then GBBN. The low is 120.83, the high is 121.42. So market is in the middle level, so we will not keep any order. Euro yen again. 105.82 is the current level, 105.74 is the low, 106.56 is the high, 58 pips negative net change is seen. Again, it is a narrow range. market is closer to the low, and we expect euro to slide, but USD yen may not make any big move, so we are not taking positions in yen crosses. So we use the market reading as well as the forecast and use the take the trading decisions. And Euro GBP currently trading around 87.39, 87.37 is the low, 87.88 is the high, 43 pips negative net change is seen. And you find Euro has made about 77 pips negative net change. GBP is making only 12 pips negative net change. So we try to take a sell position. So sell limit. Now currently it is trading closer to that of the low, Euro GBP, 1.8737. So near the low we will not sell. There should be a pullback. So 8788 is the high. They may make a pullback to that of the middle level. We come across the net change is 43 pips. So they may gain at least about 22 pips in that 50% retracement. So we will keep 0.8765 a sell limit with an entry stop of 30 pips. A little bit of mathematics has to be used in this for calculating the entry level. If you are not able to understand, then probably next time I'll explain how exactly these calculations can be done. I'm running short of time now. So Euro CHF, we are not taking position. The spread is very low currently. So these are all the orders we have put. Only GBP we have taken a position 57.82 with an entry stop of 30 pips. So 30 pips above that we keep an entry stop and see how exactly the position is making profit. Is a technical trade, sell below that of the initial low. Okay. Let me just minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market code page so that we can continue to track the market. San Francisco. Can we expect more drop today? Euro towards 1.37. It is very likely. Euro is expected to come down because it is holding below that of the initial low. So the buy position holders, they are not given the profit yet. Those who have taken an impulsive buy during yesterday's rise, they are expected to liquidate the long position during the day. Followed by the false news drop on Monday. Before Monday onwards, next week they are expected to make either way volatile moves in the market, not expected to breach the low what they have set in this month. And similarly, it's a lower level consolidation they are expected to make. Either way stop runs we could be seen next week. I'll explain more during Asian session live market analysis on Monday. Then MRC. GBP can be shorted around 58 now. Yes, that's what I had done it. So don't expect too big a profit. It's technically sell level, and probably any drop to low, we should be able to book profit. Or when they breach the low and stay below that of the new low, then probably we can expect further drop. If they come up to that of the low and reverse, then book profit in less than 30 minutes. And if they breach the current low and stay below that low for more than 30 minutes, wait for further drop. So simply using the live market code page, you can understand what they are trying to do in the market. You don't require any sophisticated calculations for that. Because ultimately, whatever the hidden agenda of the players, they have to show it in the market. Then wrong. Will GBP also participate in euro in the downward move? A nominal downward move could be seen in the case of GBP because euro GBP they wanted to drop more than gone up. We sell the initial high or low is breached by how many pips? Just a few pips, about 2 to 5 pips. And they should stay below that of the low for more than 30 minutes. The time frame is more important. Ghana, I wish to say that I stopped using the charts for many years, and because I find that they are more of misguidance for trading rather than doing the swing trades during the day. Smith. Regarding Australian dollar, can we see just a swing had shown slight drop further this and next week? Okay, Australian dollar is expected to come to the parity and below in this particular month. We could come across further downward move in the case of Australian dollar. Then again, are these current running trades or you intend to enter at these levels? They are all limit order. Limit order means they are all placed order, still not filled. Only in GBP, I have just taken the position. So whenever a position is taken, I mention it as position, and when it is order, I just mention it as a limit order. Then Smith, is it possible to see euro around 1.40 and just after we could see another drop? They may not go to 1.40, probably they will make the slide again to 1.37 and 1.3635. Test the patience of the traders and induce any long holders to liquidate, buy all that positions, and then people will say that it will go to 1.28, 1.20 and things like that. Then they will start gaining the levels. So they create the market sentiment and act against that of the traders. This is a simple rule they follow. And probably you would have seen the trailer about the margin call. The statement says you should be over smart if you want to win in the market, otherwise you should be a cheat. Then JP, what should be the profit target? When you are taking a sell near that of the high, the profit target should be low. When you are taking a buy near that of the low, the profit target should be near the high to start with. Then Ali, can profit booked in hedged position usually shown higher balance than, okay, now when you book profit in the hedging, that profit is added to that other balance. In the trading platform, they have the balance as one column, then another column, the equity, then usable margin. Whatever the money you have deposited, that becomes equity. Then subsequently, whatever the money taken for taking positions, that is subtracted and usable margin is shown. Then afterwards, once you book profit in the hedging, it adds to that other balance. That is not your money. In case if you close the other position, then it becomes your money. Hope you are able to understand. So without positions, the balance and the equity will be equal. On the hedging, if you continue to book profit with regard to the profit-making positions in the hedgings, the loss-making positions will take away those money and the usable margin will remain the same. And the balance will be added, but that cannot be used for taking positions or for withdrawal. Then once you close your other way positions, then the balance and the usable margin equity becomes the same. Hope you are able to understand that. This you need to understand before going for trading, because there are so many cheating instances happen. They simply showed the balance as a performance and started collecting money in Ponzi schemes and things like that. Then again, I'll show the PowerPoint trades. How can I have the matrix of yours? You can develop it. It's not very easy. At the sight of it, you can say they are going to drop or rise. If you continuously use the live market code page and only exclusively use it without any distraction, you need not even go through the charts. You need not even go through what is going to happen in the market or the data release. Just to make a reference to that of the data release times, that is enough. And you have seen many times, whatever be the data, the market need not make your expected moves. Yesterday, they used the trigger to gain the levels in the case of euro. Is it such a short-lived event? and they have started dropping. If you just question it, you can understand they only create the hype out of such data release, and they are trying to trap the traders. Then can profit booking in hedged position usually show higher balance than equity will be utilized in any way? Yes, you have to only focus on the usable margin, and because many of the traders send me the email stating that these are all the hedged position, how do I come out of it, can I give solutions, etc. And the usable margin will be about $500,000, and they would have taken about 10 to 15 positions. So they don't even look into that of the usable margin. So it is simple that you enter into the car you wanted to drive without knowing where the brake is kept in the car. Can anyone drive a car like that? You have to understand, you have to learn it properly, learn how to drive, where all the components are kept, how exactly you have to handle the car, you should be able to understand. You have to develop the road sense, then try to do trading. Because it is your own money, you don't bother to learn and just blow it off. Without learning, nothing comes in this world. Then again, sure, yeah. Do we expect GBP yen to slide down? See, as long as yen is holding in a narrow range, and if you see technically that like the earlier initial lows and the highs, right from Monday till today, till yesterday, whatever the low they have set it as 76.85, they have kept it as a high. So further move downward is possible in the case of USD yen. So it is, and when Euro and GBP drop, when USD yen is dropping, you know that they are expected to drop. It's better to avoid taking positions because the spread in the case of USD yen is very narrow. Yen and yen crosses. So down hunt in Euro is not finished yet. Yeah, they just made one initial downward move and then come above as a pullback, still not gone above that of the initial low. That indicates that probably anybody who has bought it here, they are willing to give profit. But if anybody has taken a higher level near that of the low 1.3837, they are still not given the profit. So all will come for long liquidation. Suddenly realizing that the market sentiment is changed again. So the most important thing in the market is not the level, it is the sentiment. So they can simply change the market sentiment upside or the downside by just giving different set of interpretations for different events. If a data is released, they can simply avoid making any move and say that it is discounted. Already it is priced in. And if the data is unimportant, you may think that it may not be important. They can derive anything out of that and say that because of that, there could be an interest rate hike. Simply they can create a hype and start making the rise or drop in the market. Then Matthew, how much downside can we see today? Australian dollar could go to, it's currently near that of the high. Now I kept a sell order 1.0358 that it got filled. Okay, so the downside it can go below that of the low. They are expected to breach the low today. At the moment they are handling the crosses. Keep it in mind because Aussie New Zealand dollar cross and Aussie Canadian dollar cross, these are all the things they are handling. That is why Canadian dollar and Australian dollar are in positive net change. So don't be afraid that they will make big moves now. They will be making only big moves in the case of cross. Then AAA, GBP is close to stop out. If yes, if it is stopped out, I just only taken a technical trade. My stop is 30 pips above. Let me see whether it is stopped out. If it is stopped out or hedged, I'll accept it. I will not move it away. And when it is hedged, I'm not keeping a stop today. I'm just keeping a hedge order. If the hedging is making profit, For 30 minutes, I'll keep stop at entry. If the hedging is not making profit for 30 minutes, I'll simply close the hedging and keep another hedging order 30 pips above the market and start trailing it downward when they are moving downward. And till such time, I'm able to keep stop at entry. So I don't take any time undue risk. Because it's a hard-earned money, how can we take risk on that, on speculation? Then GDPT. What is expected of Euro and GBP for the rest of today? They are expected to slide today. M-Drive. Can we assume in order for Euro to go down to 1.35 level next whole week? Not necessarily. See, to gain from 1.35 to 1.39, they had done it in 3 days. Why do you think that it should require 5 days to come down? They can move either way pips or moves to next week. You just watch how they are going to do that. Then USD CHF and USD CAD, how much upside move? USD CAD is expected to go above that of USD CHF is expected to go still higher, above that of 0.9093, etc. And Canadian dollar is expected to breach parity and above very shortly. Then JAI. Has the downtrend started in Euro or because weekly charts are showing a bearish trend to 1.30? See, theoretically, when you derive, will you be able to give the time frame when it is expected to go to 1.30 and also 1.25? Yeah, probably down the line 3-5 years, it could be possible. But unless and otherwise we do not know the time frame, how do we determine when exactly it is going to 1.30? That is a limitation by using the long-term charts. I'm not trying to criticize. Being a statistics professor, I understand the limitations of that. I'm trying to explain to you, that's all. If the market is not manipulated, the charts and all our statistical studies will really help us to make money. Unfortunately, it is manipulated. I'll show that slide again. So 1.3830, we kept a sell limit order. Still they are not come there. And GBP is 30 pips above. $1.5812 is our hedging order. Still it is not filled. And 87.30, yeah, it has come. Then this has also become a position. So when you fine tune the entry by keeping calmly the orders, we find that really we are able to have a better level to enter into that other market. Now they have made an upward stop on above that of the high in the case of AUD 1.0363 was the initial, recent high, and they just made an upward stop on 3 pips above. So during that process we got it filled, and still Euro GBP is not filled. So except Euro, other positions are filled now. So in case if it is hedged 58.12, I'll just watch for 30 minutes, and if they are not going above 58.15, I'll simply close it with a nominal loss and keep 30 pips above another hedging order. Okay. Hope everything is clear. So I'll come back by 13 GMT, and during that of the gap time, and try to explain to you how exactly the gap time trade can be done, and also I'll explain with regard to the results of the positions what I have taken now. So see you again by 13 GMT. Thanks for being with me.